Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report. And again, this is the same report from Friday. If you recall, the last couple of reports I've been focusing on this report by Jamie. All the talk of capitulation recently has been just that, talk. However, one specific indicator signals a warning. So again, this was written last Friday, and Jamie has been correct in terms of calling a final bottom, at least a temporary bottom in terms of the euro dollar and both the pound dollar as well as some other pairs in terms of the dollar in general. But this particular report is fascinating in terms of the reasons behind why Jamie was expecting the reversal here in both the euro dollar and the pound dollar. The link to this report is located just above this presentation, so I certainly would suggest you taking a look at the article and reading exactly why Jamie felt has to do with the ATR and certain readings on the ATR, and that indicated the potential for the reversal. So let's go ahead and pull up the charts. But as I did mention, during the last few reports, the idea was that we shouldn't try and pick a bottom because that's always dangerous. And in the case of the euro dollar, you might have been expecting that bottom to be at 135, and maybe you were patient and you waited for it to get down to 130. But then, obviously prices went down all the way to about 123, I believe the low was. So that's the thing. Markets can remain irrational longer than you can remain solvent. And that's the key point here, is that we don't have to try and pick bottoms. Now that these pairs, and when I say these pairs, I speak specifically of the pound dollar and the euro dollar, seem to have formed at least temporary bottoms. Now, if this is going to be a longer corrective process, as they usually are, corrections usually take a longer amount of time than do the trends that preceded those corrections. So, if that's the case, now that we have a tradable rally occurring in both the pound dollar and the euro dollar, we should now wait for a retracement in that corrective rally where we would then enter on the long side in both pairs. But again, that's not something we should do tonight. It's not something we should even do tomorrow. What I would suggest is keeping an eye on Jamie Setley's reports each and every day, where you will get a better idea of exactly where those support levels will lie in the pair, assuming that this is a corrective rally. So let's go ahead, and this again is the pound dollar, and we can see the last yesterday's candle. We had it's like a celebration, the fact that the pair actually had an up candle, or a green candle, if you will. But again, this is not something that we should try and trade here. Now let me bring up the euro dollar. The same thing. We have a borderline morning star reversal pattern. I guess if you combine these two candles, there's no reason to ever be so literal about candlestick patterns. But at the same time, the same logic applies. Just keep an eye on Jamie's reports and look for entries once this the initial rally of this correction will have a correction itself, and that's where we would look to enter. And again, we would do so by waiting for Jamie's report. So let's go ahead and now looking at trade opportunity that could develop within the next few hours, or it might already have occurred here in terms of the dollar yen. This is a simple resistance line. Obviously, the yen had the yen weakened considerably during yesterday's session, and we can see that prices have been contained beneath this shorter-term resistance line. This is the resistance line that I would be using right now. Again, the pair is in a very steep downtrend, but we have to keep in mind that the move lower was relentless, and usually when that occurs, the opposite moves are usually relentless as well. So I would maintain a slight bullish bias against this shorter-term hourly resistance line. Right now, it lies just below that 100 figure, so that could be, obviously it's an important psychological level as well. So what we might do over the next few hours, again, the volatility has been extremely extremely high, so there's, it wouldn't be out of the ordinary for the yen to rally another 100 or 200 pips here back up to that resistance line. Now, at that resistance line, we might look for short trades, try to enter just before or just beneath the resistance line with a stop just above, maybe 30, 40 pips above the resistance line. But I want to reiterate the fact that, the pair had a massive sell-off. And the corrections, there's no rule that states that this resistance line has to hold, and there's a decent chance that prices might, they seem to have respected the line the first time, but that doesn't mean the second time it might just completely ignore that line. So we have to keep that in the back of our minds once prices do approach that resistance line, and this will help us, use the proper risk to reward in the trade. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.